Okay, hey, good morning, traders. Welcome to the Saturday scanning session here with followmetrades.com. I'm Dean Jenkins, founder of Follow Me Trades, and I am glad to be here. Thanks for taking your time on a Saturday morning to come hang out with me, and let's see if we can find some good trades. Before we get started, make sure you can locate the chat window in the Zoom webinar platform, because I definitely want to capture your questions, your comments, your feedback as we go along here. And toward the end, I definitely want to be looking at any symbols that you're interested in. So make sure you can locate that chat box and go ahead and type in where you're calling in from. That'll just make sure everything's working, and that's always fun and interesting to see the various localities. So whatever city, state, country you're in, go ahead and type that in. Hey, Mike, probably about an hour, maybe a little less. Bothell, Washington, India, nice. Ottawa, a couple Ottawas. Vancouver, New York, Colorado, they're going faster than I can see. South Africa, Johannesburg, nice. Bruce, San Diego, Parker, Colorado. Earth, well, Barry, if we have any extraterrestrials, go ahead and call in. Italy, Milwaukee, Canada, Poland, wow. Sweden, we got the planet covered. I saw India, South Africa, Europe, California, Kuala Lumpur, Kenny, nice. Eastern Washington, well, down a little drier over there than it is here in Olympia. Wherever I'm just in the Seattle area, just south of Seattle. North Carolina. All right, Austria, Tulsa. Okay, well, it looks like we still got folks logging in. Niagara Falls, New York, awesome. We got folks from all over. Well, it looks like you are able to find the chat box just fine, and that is good, because we're definitely going to need it. Again, I want to answer any questions you have, and I want to take a look at any symbols you want to look at later in the session. Let's go ahead and get started. Before we do, though, just a quick disclaimer. We always got to do this, and that is, we're going to be looking at live markets. We're going to be looking at real trades. And I'm a trader. I am not a financial advisor, and I'm not giving financial advice. I'm going to be talking about trades that meet my criteria that I'm interested in taking. We'll even show a couple trades that I'm in. But whether any individual decides to place a trade, an order, make an investment, that's solely the decision of each individual. Only you know what's appropriate for you, for your account, what your risk tolerance is. And of course, all trading and investing absolutely involves risk. So I share what I do. Each person makes their own decision. I'm not giving financial advice. Fair enough? All right, let's go ahead and get rocking here. I know several of you were invited by other third parties. So maybe you're not sure who I am. I thought I'd introduce myself just really quickly here. So my name's Dean Jenkins. I'm the founder of followmetrades.com. And I've been trading and investing for about 20 years. And I really started when I started working for Intel Corporation in 1993. And what a great company and what a great experience that was. And part of the deal when I worked at Intel was we got employee stock purchase program and incentive options. And from 1993 until about 2001, boy, Intel just pretty much went straight up. It was like clockwork. It would split and double every 2 years. And so I decided I was a really good investor, obviously. I owned this stock and it was going up, right? And I started investing in .com stocks and had some mixed success. Got some winners, got some losers. During my time there, I got my MBA from the University of Washington, and I was a fundamental trader. I was off, analyzing financial statements and ratios and studying products and management and all this stuff. And got mixed results. That was just a frustrating experience overall, because you got a great company, great products, great earnings report, and it come out and you'd be banking on that. Well, that's just going to rock, and then it would just tank, and it was frustrating, and the opposite sometimes would happen. And then I totally gave up on the market. I actually was so frustrated, I got out and just went to cash before the crash. So that was just luck. But after the crash, I just couldn't stay away. Trading was too interesting, the idea of it. So after the 2009, when the recovery started, I started getting back in, and you know, I got into a couple trades like Bank of America. I think I bought it around $5, and that thing went up to like 12, you know, over time. And I was totally stressed out, even with a winning trade, because I didn't know how to manage it. And it's like, should I take some profit now, or is it going to keep going? What's it going to do? And it was totally stressful. But about this time, about 2010, I got really interested in technical trading as opposed to fundamental trading. Because I always thought, as I looked at stock charts, it's like, there just seems to be a pattern here. And boy, if you could just understand that pattern, you could probably do really well. So I made lots of mistakes as I started. I bought lots of indicators and, you know, fell for a lot of schemes. And in the long run, that was good education, right? But I finally settled in on my current trading system around 2012 and really turned the corner to becoming a consistently profitable trader. And I've been doing it since then. And 2015, I launched followmetrades.com. And this is my website here, followmetrades.com. And here's my track record going back to 2013. So I'm not, you know, I'm not claiming anybody's going to take a $10,000 account and buy a Maserati at the end of the year. What we're talking about is solid, consistent gains. We're on track to beat last year, so I'm pretty pleased with that. And I've learned over time that people really value transparency and verification. So on my trades, you know, if you click on one of these buttons, you can see I list every single trade I've taken. You know, this is 2017 year to date. And you can see not every trade wins, right? That's just a reality of the marketplace. And I show the losers in addition to the winners. And I've also learned the value of verification, that people value that. And so I've actually hired a CPA firm, and they audit my results now starting in Q2, Q3. So they actually, I give them my statements. They look at my website, what I'm claiming, and they go see whether I really did it or not. And I think people just value that. So that's just, again, a quick introduction to me, who I am, in case you don't know. I think everybody else has sound. I got one person saying no sound. I think it may be their volume, because everybody else, hopefully, give me a thumbs up or a yes if you hear me okay. Otherwise, I've been talking to the wall for 5 or 10 minutes here. Yeah, it's okay. Okay, good. You know, I lost my internet connection when I was presenting one time a couple of years ago, and I did talk to the wall for about half an hour. Beautiful, right? All these moments in life that keep you humble. All right, hey, so stay with me through this, if you would. First, I'm going to talk about the setups I'm looking for, because before we go look at charts and I go, I like it or don't like it, I'll tell you what I'm looking for, what constitutes a chart that I do like. I'm going to walk through my scanning technique, how I narrow down to a manageable list of symbols to go look at. And then we're going to go find some great trades. I'm going to apply this stuff. And then toward the end, I'd be happy to take a look at any stocks that you're interested in. And I may like some of your ideas. So quite often I get good trade ideas from sessions just like this from people just like you. So it's a two-way street, man. I'll offer my opinion. And who knows, you might just show me the next great stock that I wasn't aware of, and maybe a great trade idea. Once we have some great trades, I'll project using my method, my criteria, what would be a good option contract to trade the various ones with. So stay with me again toward the end if you want to get the most out of this time. And you know, if you're multitasking, we're going to go pretty fast, so you might miss some valuable information. So if you want to make the most of it, you might want to just tune in here, and I'll try to go fast and keep it interesting. All right, let's do it. So here's the thing. I think to be a consistently profitable trader, I can say it. I think these three things are absolutely essential. First, you got to have great trade setups. Now, I've got my criteria. Mine aren't the only ones on the planet that work. They just happen to work for me consistently and for my customers who are following along. But you got to have great trade setups, and the setups have to have a high probability outcome, right? They have to have some kind of edge that, you know, says this trade has a greater than 50% probability of winning, and the higher the better. And they have to have a good reward to risk ratio. I think it's essential to only trade potential trades that have the potential to make more than they could lose. And we'll talk about that in risk management, right? So we only trade when we have a great reward to risk ratio. I don't want to take a trade that has the potential to lose more if it loses than it could make if it wins. Doesn't work for me. Okay. I use Ichimoku Cloud in my trading. It is one of two key systems that I use. And so when I'm looking for a trade setup, I like to see this price both cross over the fast over slow. It's called the Tenkan and the Kaijin, fast over the baseline. Very similar to a two-line simple moving average, just calculated a little differently. And I like to see price break above the cloud. This is the shaded area, right? When we get these, when we get a crossover and a break, that can indicate a new trend and entry points. And you can see when it's right, it is right big time. And also the Ichimoku cloud can then project. So these shaded areas projected out into the future, and it's projecting support and resistance areas. So in this case, in the uptrend, it's support. You can see as price came down, right? It came close to the support area. You can even touch it or go into it. But in the trend, this is powerful support and resistance areas. And so I like to see this. This is one of my criteria to have price break above the cloud, have the fast over the slow, right? And then I've got a few more criteria as well. I use Elliott Wave. And some people roll their eyes and go, oh, Elliott Wave, you know, really? Because a lot of people overcomplicate it. I take a very simple approach to Elliott Wave. And pretty interesting that Ralph Nelson Elliott was developing Elliott Wave theory back in the 1930s, same time that Goichi Hisada was working on the Ichimoku cloud. So they were, you know, contemporaries in their time period. Anyway, what I'm looking for here, here's an idealized Elliott Wave pattern, right? You have, you know, Elliott, his theory said, hey, price moves according to investor psychology or crowd psychology, and there are waves of optimism, and then after a big period of optimism, there's a pullback into a little bit of pessimism and profit taking, and then another wave of optimism. And it can move the opposite way in a bearish trend, big, huge move of pessimism, a bit of returning optimism, and then a continuation of the original pessimism. So he said, hey, price moves in these kind of cycles, and they can become fairly predictable if you get the pattern, right? If you see the early portions of this pattern forming, then the subsequent parts of the pattern have a very high probability of continuing. And I think that's interesting. You know, the classic approach to Elliott Wave, there's 144 permutations of various cycles, subcycles, and supercycles, and all this stuff. Way too complicated, way too much for me to try and memorize or use in my trading. I like to keep things absolutely simple. So I'm only looking for 3 trade setups. I want to catch this initial trend. That's big. I want to catch the correction and trade it if there's sufficient profit, and I want to catch the correction. So I'll trade in Elliott Wave terms of wave 3, 4, or 5. Right? And they are super obvious on charts. You don't have to study a bunch of weird stuff, and I'll show you when we get to the charts here. So I like to overlay Elliott Wave and Ichimoku Cloud. I call it East meets West because they're completely independent systems, and when they agree, that has real power, right? That's really important. Okay, I'll get to those symbols, Michael, later in the presentation here. I use Dow Theory for trend confirmation, so it's real simple. It's a portion of Charles Dow's theory. He developed this theory back in the late 1800s, and it's still viable today. What he said was, hey, you got an uptrend as long as you have higher highs, higher lows, higher highs, higher lows. As long as that pattern continues, as long as price doesn't go below the previous low, and as long as it goes on to make new highs, that's an uptrend. Downtrend is lower lows, lower highs, lower lows, lower highs. This is really important. It looks so simple, but it's really important because when you're in a trade and it's going up, you go, yeah, good, and it starts pulling back, you go, oh, is it over, is it over? This gives you some rules, some objective criteria to go, are we still in a trend? You know, I talked about being in Bank of America back in 2010, 12, and being stressed out, right? Well, if I'd known about this, I wouldn't have had to be stressed out because I would know the rules and go, yeah, it's still in an uptrend. It hasn't ended. It's pulling back. It's all good. And this also gives us points to get out because when we do go below the previous low in an uptrend, it's probably over. It's probably time to get out. Same thing in a downtrend. Once it starts, going down, 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 this trend ends, right? Ooh, we went below this low. That trend is probably over. And in a downtrend, when we start, we're lower lows, lower highs, lower lows. We took out that lower high. That trend is probably over. It is probably time to get out. Well. Is there a free charting platform with Elliott? So Elliott Wave is not an indicator. It is not. It's a theory. Elliott Wave is a theory, and you study price action. And so to see if it conforms to the theory, to the the waves in the theory. So there's lots of free trading platforms. NinjaTrader is a good example. And you can use the Elliott Wave concepts on pretty much any trading platform. And we use Fibonacci tools to measure and project where things are going. We're going to be doing that a little bit later. All right, so I said you need great trade setups. I talked about that. You need a high probability outcome, great reward to risk ratio. Got to have risk management in your trading. If you're going to be a consistently profitable trader, got to manage risk. And it ultimately comes down to, you got to determine how much you're willing to lose on the trade. And I think that has to be a pain-free level, an amount that will not be a setback. I use 2%. So 2% is the amount that I am willing, not wanting, but willing to lose on any given trade, 2%. So if that's a $100,000 account, it's $2,000, right? For me, that's a pain-free level. I won't like it, but it won't be a setback, right? And in my risk management approach, so 2% is not the size of the position. It's not like, oh, I'll go spend $2,000 out of a $100,000 account on the trade. No, that's the amount I'm willing to lose, right? So I determine the stop loss price on my chart using Dow Theory. I look at what's the last key support area that, if taken out, would indicate the trend had ended, and then I put my stop there. And then I determine my position size by taking the entry price minus the stop price and dividing that into 2% of my account. That tells me how many shares to go buy. So if the stock's trading at $5 and my stop is at $3, that's a difference of $2. And so I would divide 2 into 2,000, and it would say go buy 1,000 shares, and that would be my position size, and that would be 1,000 shares times $5 would be a $5,000 position. Okay, so that's my approach to risk management. And then I trail my stops, right? And that gets into trade management. So we need great trade setups, we need great risk management, we need great trade management. So once you're in a trade, risk management is totally different than trade management, right? Risk management is how much am I willing to lose and how am I going to determine that? And, trade management is, okay, I'm in the trade, now what do? How do I manage it? And if you don't have an objective, black and white set of rules that you're going to follow when you're in the trade, what's going to prevail? What's going to drive your decision making? It's going to be emotion, right? So you'll hear a lot of people teaching about trading go, you have to get the emotion out of your trading as though you could control your emotions. Emotions happen, right? If a trade's going against me, I'm probably going to have this chemical reaction that's going to make me feel unhappy, right? And if it's going my way, I'm going to do the happy dance, right? I really can't control my emotions. What my physiological response to external stimuli is, I can't always control that, right? But what I can do is control my behavior. I can control the actions that I take based on external stimuli and what's going on. And the way to do that is to have rules, black and white written down trading rules about how I'm going to manage the trade once I'm in it. And great trade management includes taking profit at the right times, adding to the position strategically, staying with a winner for as long as possible, and exiting the trade at the right time. Those are all part of really good trade management. And I use, again, Dow Theory when I get into a trade. As the uptrend progresses with higher highs, higher lows, higher highs, higher lows, I trail my stop up to the new higher lows as new higher highs are put in, knowing that that's a key support area, and if price goes below it, the trend has probably changed, and it is definitely time to get out. That's where I want my stop, is at the point to get out when the trend has ended. I take profit once we cross key Fibonacci levels. I take profit before big news events like earnings or a drug approval from the FDA or something like that. If we know something disruptive is coming up, I go ahead and take profit, reduce the position size. I also have some math for adding to a position when certain rules are met. I never double down. I think that's a lousy strategy. Some traders, if they get into a trade, a long trade, and it starts going down, they go, I'll go add to that. I will reduce my average cost basis. Yeah, you do reduce your cost basis. You also increase your risk dramatically. So I wait for the price to go up, or wait till I trail my stop, and then I have a specific formula to maintain my original 2% risk and go ahead and add to the position and try and increase some profit. So, okay, those are the three things, right? In order to have consistently great profitability, consistent profitability, you need great trade setups, you need great risk management, great trade management, right? So wanted to cover all that. So here's how I scan for trades. Now we're going to get into it, right? I create a big picture review. I just want what's going on in the overall market. I think that's important to step back and do that rather than just go micro onto one stock first. Then I create a thesis, a theory. Here's what I think is going on. And then I use that thesis to draw my attention to a particular sector of the market. And then I go get some symbols in that sector, and then I narrow those symbols down to a manageable list, and I start looking at charts, right? There's 8,700 active symbols across the U.S. markets. Way too many to look at. We've got to have some way to filter that down, right? So we do that. Big picture review, create a thesis, narrow a big list down to a manageable list, and start looking at trade setups. And again, at the end, I'll take a look at any you're looking at. So here we go. Let's go look at the big picture first. You guys ready? Enough talking. Let's get to some charts. Find my cursor. Okay. Let's rock and roll, says Thomas. All good, says Mac. All right. So here's my basic chart, daily intervals where I'm starting. Get rid of this line. We don't need this line. So what have I got here on my chart? I've got the Ichimoku cloud. I've got a 200 SMA. That's this thick white line. I think that's an important level to pay attention to. I've got a price oscillator that's showing momentum, and this is a trend filter. It turns green when it predicts more highs. It turns red when it predicts more lows. Very simple. Trying to keep my chart as clean as possible. Right. We'll get to those symbols. Jiminy. Hope I say your name right. I hate to mess up somebody's name. All right, we're looking at the big picture. Here's the Dow Industrials on a daily chart. Wow, big uptrend, right? And current price recently put in brand new all-time record highs again, like it has been doing all year, right? A little pullback last couple of days of last week, but overall, if we look at Dow Theory, right, we're still putting in higher highs, higher lows, higher highs, higher lows. So, okay, Dow, in a bull run, no sign of changing at this point. Let's look at the S&P 500. I bet it looks very similar. It looks almost identical, the S&P 500, right? 4 or 5 days ago, put in a new high, pull back a little bit, but still an uptrend, okay? What about the NASDAQ? Bring this up. NASDAQ, almost identical, still in a bull run, all-time highs very recently. One more index out there, isn't there? What about the Russell? Oh, Russell looks a little different, doesn't it? How long has the Russell been heading down? Since the beginning of October. Since the beginning of October, when the other indexes are putting in record highs, the Russell is not. It is heading down. Now, is this trend over? The major higher low is here, so higher high, and it has not gone below that. It really hasn't shown any evidence of the trend turning. We do have some negative momentum down here. This just turned red. That's pretty interesting. It's in the cloud, so it may find some support here. It may find some support, and the cloud's pretty thick. But there may be some individual issues that are driving the Russell down. And yeah, Michael, some people have theorized that the Russell will lead the other indexes down. And the Russell 2000 is made up of primarily smaller companies. So this is an interesting thing that we find in our big picture scan here. So my thesis, my theory that I'm going to go work off of in this session is there may be some great short trades coming in the Russell because it looks like it is not putting in higher highs. It is starting to turn down. Now, we're not going to go trade anything just because of this. We're going to go look for the absolute setups on individual charts that meet my criteria. So this is simply taking our attention to that sector of the market. Fair enough? So let's go look at the Russell, man. Let's go look for some trades there. So what I do is I'm using TradeStation. It's got some nice scanning tools, and let me bring this up. So this is TradeStation Scannir. Every platform's got something like this. But what I'm doing here is I'm setting some criteria. So what I want to do is I'm going to scan my universe. My symbol universe is the Russell 2000. So I'm going to look at all the stocks in the Russell 2000. And I want to look at issues. These are smaller cap stocks, and I'm fine trading small cap stocks. But I'm not going to trade penny stocks. Not my thing. So I want price to be over at least $2. I want to trade symbols that have good liquidity, meaning the volume of shares traded is good. So not only can I get in to the thing in an expeditious manner, but when it's time, I want to be able to bail. I want to be able to sell it and close my position. I want there to be a liquid market there. So let's say at least 300,000 shares per day. And I want serious companies that are going concern. So I want a market cap of at least half a billion. So $500 million, $500 million, right? So that's my criteria. Over $2, over 300,000 shares traded on a 10-day average, and over $500 million in liquidity and market cap. So I run the filter, and guess what? We don't get 2,000 symbols. We get 668 symbols. Okay, so we've narrowed it down, so we don't want to go look at low volume, low market cap, low liquidity stuff. All right, right on Durango, says Michael. I'm just catching up on questions here. Yeah, we're gonna go through that, Sean. Sean's asking, hey, how do you identify your good entries? Well, we're gonna go find some, hopefully. So here I've loaded all those 668 symbols that we just narrowed the Russell down to less than half of the 2,000 that meet my criteria. Now we're going to run some data against it. Now I said I have the 200 SMA on my chart, and I've written an indicator here for TradeStation. I want to know, is price above or below the 200 SMA? I want to know how far price is from the SMA and how many bars since it crossed. Because a stock that's below the SMA and it just crossed 7 days ago, that could be a new trend. And now I'm running the Ichimoku cloud indicators, and I'm looking for, I want a downtrend, I want price below the cloud, right, for a bearish trade. Right now we're interested in scanning for bearish trades on the Russell 2000, the filtered list. Okay, so I've got my data now. And again, Thinkorswim, Ninja, they have similar kinds of tools where you can do this. You can put indicators in and generate data for a list of symbols. At this point, TradeStation, the radar screen, not that good at sorting and filtering beyond this. But what the nice thing is I can select this whole thing, I can right click, I can copy it, and I can paste it over to a tool that is absolutely marvelous at sorting and filtering, and that's Microsoft Excel. So I've done that. I've got that list with that set of data over here on Excel. And I've done some conditional formatting so it's just easier to see, right? So red is below, green's above. Red and green, easy to interpret. We're going to now sort this. So we're interested in short trades. That's what I'm scanning for. So let's sort this. Let's short this. Let's sort it. Okay. So let's sort first by price position on the SMA. Price position, and I want it below. So B is after A. So there. I want another level. I want to know how many bars since cross. And I want the smallest to the largest, because the ones that just crossed over it have a single-digit number, maybe new trends. And I want to know how far price is from the SMA. So percent from price smallest to largest. Ready, sort. Okay. Now we've got a list in priority order, right? First criteria has got to be below the SMA. It's red, bearish trade. Very few bars since crossing. So this is a new cross. Thing just turned down and it's really close. Now we're gonna look for the ones. We're gonna go check charts that have prices below the SMA. The Ichimoku trend is down. The price is below the cloud. That's what we're interested in. All three red. Okay. So not all of them meet that. So now, remember I said in scanning what we want to do is do a big picture review, create a thesis, lead that to a sector, and narrow it down, and then start looking at charts. And now we've done that. We've got a handful here that we can go look at here. So the first one is SONS. So I'm just going to start running through this list on a chart, and we're going to see if there's any interesting trades. And pretty soon we'll know whether my thesis is yielding fruit or it's empty and there's nothing there, and we'll have to create a new thesis. Okay, that happens. And I mentioned when I was talking about Elliott Wave that not all charts are going to meet that pattern, right? That that Elliott Wave is valid and useful when the pattern exists. When you got chaos and a messy chart and it's just volatile and swinging all over, and we're not going to try and find a wave count on there because it doesn't exist, right? And I don't really want to trade chaotic, overly volatile markets. Okay, so we'll probably be looking at 10 to 15 symbols for every 1 to 2 that look good. So just, you know, be prepared for that ratio. That's how it goes. So we're looking for short trades. Here's SONS, Sonus Networks. And pretty instantly, I can look at this and go, well, I don't want to short this. It's had a huge drop. It hasn't retraced to a Fibonacci level yet. So the next move for this is probably going to be that retracement up into this zone. So that's kind of going up, but it's not a great long trade. So first trade is a bust. Next one, EIGI. Again, we'll go fast. Oops, did I get that right? EIGI. There we go. Same kind of story. I hope my thesis gets a little better than this because this is a huge drop, hasn't retraced yet, not interested in it. Where we got next, ONV. That's kind of the nature of this approach to scanning though, isn't it? Well, now this one is different. It's gone up, it's retraced, it's gone up, and now we had this gap down. So that's why it triggered. It's been 2 days under the SMA. It's just under the Ichimoku cloud. Now the question on a trade like this, I mentioned you got to have good reward to risk ratio. So the setup's not bad. Get my scale fixed here on this oscillator. Yeah, the setup's not bad. The question is, what's the potential reward on it? And I'm going to use Fibonacci retracements to measure where we expect it to go. So I'm going to look at the absolute high, and we expect a retracement down into these two blue lines. This is a 38.2 to 61.8 Fibonacci retracement zone. And so we expect price to get here. It already got here once. It went up, didn't put in new highs, so it's probably coming back into this zone. The problem here is, where would we put our stop? I talked about, you know, lower lows, lower highs, putting stops at previous support or resistance areas. So our stop would be here. Our current entry on this trade would be here, current price, and our price target would be in this Fibonacci retracement zone. And I use a very conservative approach to that. I put my target right inside the zone rather than going, oh, it's going all the way. What if it just goes back into just nudges back into here? Would the profit potential still be sufficient for me? Well, the risk is the distance from my entry to my stop. That's the risk amount. The reward part is from my entry to my target. You can see this is smaller than this. This is about 1.5 times larger. That's a deal killer. I'm not taking a trade that has the potential to lose more than it's going to make. So, boom. Why 38.2 and 61.8? Those are key retracement levels, correction levels for after a big impulsive move. A very high percentage of them, you know, pretty much every big move you see will have a correction. And the zone that it will correct to about 70% of the time is 38.2 to 61.8. 15% will fall short, 15% will go over, about 70% will hit that zone. Yeah. What scale am I using? So this is a daily chart. And then I get enough data, you know, I compress it or expand it and play with the vertical scaling until I can see the price pattern. What's the current move going on? So I just play with the scales until I can see the big deal here. But we're spending too much time on OMB because it's no trade. Next is BCOR. Part of what I teach in my Master Traders course is how to do instant chart pattern recognition and only spend your time on trades that have good potential. This one's worth spending time on. There's a nice big impulsive move. It started down. That's what triggered us to look at it. The fact that it just came under the 200. It's under the Ichimoku cloud. Let's do a quick retracement measurement. What's the price target zone on this dude? And again, there's not going to be enough reward. It's the retracement's already too well established, too far gone, not enough reward. So we'll just keep moving, right? That was BCOR. Let me just keep going down my list here. MDXG. You know, I love finding stocks. You know, I don't mind trading Apple and Nvidia and the FANGs. I don't mind that. But all those marquee stocks, there's something fun about finding an obscure stock with a great setup that nobody's heard of and knocking it out of the park. That is pretty good fun. I can look at this because I've looked at thousands of charts, and I can tell this is the big impulsive move. This is already corrected into the wave 4 zone. So that was a good trade. It would have been a good entry up here as it first broke. Of course, it wasn't above there, so couldn't have got it. So yeah, nice play out of Elliott Wave, but there never was a good trade there. That's a bummer. Let's see, next, BCOR. Oh, what do we got here? It's like I've looked at it before. Blue Cora. Never heard of them. Again, I get kind of excited about that. So here's the big move. Here's the big move up. The correction's beginning. We got it on our list because it just broke the 200 SMA. It's under here. It's red here. It's red here. Our stop on this would be right here. Actually, right here. Right here. Above that last, that one bar. That I like it when there's more, but that's enough. That's enough. That was a little down, up, down. So that's enough. Current entry here at the close, which is up here, and target in here. So that's bigger. That's about 1.5. So it's not huge, right? It's not huge, but from $20 to $17, that's a $3 out of 20. It's not a bad, 7 or 8%, is it? No, more than 10%. Yeah, 12 or 15% win. That's not bad. That's not bad at all. So that one, I'll make a note. B Core, that's a good one. I like that. It's not huge, but it's solid. It's a high probability outcome. We've had this big impulsive move. It started down, probably some news, right? It's making lower lows, lower highs. It broke the 200 SMA. Got nice, dramatic negative momentum. That's a short, Maurice. That's an absolute short. The price target is down here at 17 bucks. All right, well, that one looks good. Let's go back to our list. REVG. I was talking before about, not every trade has a wave count. Some of them are just a chaotic mess. Here is the case study on the chaotic mess, REVG. Not great. Mac, it's a good question. He's asking, do I concern myself with what the overall sector is doing, or am I satisfied just that it's in the Russell and the Russell's going down? I will, before actually placing that trade, I'll do a couple things. So I'm not a fundamental trader. I don't care what their earnings is, whether it's negative, positive. I don't care what their PE ratio is. I don't care who their CEO is. But I do care what sector they're in, what the sector's doing, and whether there's any big news. Is there an M&A on the table? Are they going to announce earnings in 2 days? Are they a drug company and the FDA is going to approve or disapprove their drug? Are they filing for bankruptcy? I care about all that stuff, so I'll do a quick scan before I take the trade. Go look at news, go look at the profile of the company, what sector they're in, what the sector is doing. Are they fighting it or are they going with it? Right? I do check those things. Good question. But the chart at the right side can only see your picture, not the bars from the last. What's the bottom? I'm not sure what the scale is. There's no bars over here. This is all black space. Bottom indicator here is, this one's called the precision trend filter. It's similar to an RSI, but interpreted backwards. Amit says, but sir, if we see the fundamentals and then see technicals, cannot be beneficial to us for trading and investing. Boy, there's 1,000 ways to skin this cat, right? If you're comfortable with, doing a, kind of a compounded analysis where you look for technicals and fundamentals, cool. I've seen too many times in my own experience companies with outstanding fundamentals go down and companies with terrible fundamentals go up. It's, you know, price movement, according to Benjamin Graham, the father of value investing, the one who really influenced Warren Buffett. He said, the stock market in the short term, meaning 1 to 2 years, is a voting machine, right? It is a voting machine driven primarily by opinion and emotion. People are voting up or down. In the long term, longer term, at 2 years plus, it is a weighing machine where it weighs earnings and value, right? In the short term, it is a voting machine, and the market can vote against a company with great fundamentals, and it can vote against a company with terrible fundamentals. I trade based on that. But it's a good question, and each person does what's comfortable for them. I prefer, T Branch is asking, do I trade options or do I trade the stock? You know, all my decision making, let's get rid of this ugly chart. It's just horrible. Let's get the next one up. IPHI. I prefer options, right? I have no problem buying shares or selling shares, but I prefer options, and there's a couple of reasons. Leverage, capital efficiency, and it lowers the risk. You actually lower your risk with options if you do it right. So I prefer to trade with options, for sure. So here, again, I adjusted my scale. We got a nice impulsive move up, little volatile. Look at this, perfect wave 3, impulsive wave. Perfect correction already happened right into the zone that we defined that 70% of impulsive trends correct into. It did it. And now we have clear evidence of the next move up starting with higher highs, higher lows, higher highs, above the 200 SMA, growing momentum down here, above the Ichimoku cloud. This one's a nice one. This is a trend continuation, wave 5 trade with a target. Now this, the other one we looked at was marginally okay. This one is spectacular. So here is where our stop would be currently, right there under the cloud. Our current price is right here. That's our entry. We can blow this out now that we've seen the pattern, right? We can blow this out, and here would be our target. By the way, this is a long trade. That's okay. We find a long trade, we're good. So here's the risk. Here's the reward. The reward is 4 times greater. This is a really nice potential long trade here. Outstanding. Yeah, I think I jumped ahead because I did want to look for some longs as well, and I jumped ahead on my spreadsheet down into the long area. So yeah, so that is a long trade, and I jumped ahead on my spreadsheet, but it's a great long trade, right? And again, we would scan the sector and look for news and all that kind of stuff on this. Why do I like Ichimoku? Because it's a predictive indicator, and it predicts, you know, what the support area is going to be, and I think it gives a really, really good idea about what the current trend is. It confirms it with, you know, where the shaded area of the cloud is going, the color of it, and it does a great job of predicting. So when you break down through the cloud in an uptrend, that tells you, in addition to Dow Theory, it gives you additional evidence that the trend is changed, right? And I like it that it's a completely different approach from Elliott Wave. And so we have independent studies confirming each other. That's really powerful. Yeah, so let me get back onto the short trades and see if there's any others here. Let's look. How's our time doing? We're doing pretty good on time. NSM. Get back to my short area, my chart here. So here's a nice short. This looks, I can look at it again. After you look at a few thousand charts, you can kind of see it. So here, this is a wave 5, which is a more highly probable trade than a wave 4 correction. So that very first one we looked at was BCOR, was a wave 4 correction. So this one, here's the big impulsive move down. Here's the correction right into the Fibonacci retracement zone. And now we see, again, clear evidence of this thing heading down. It's broken the 200 SMA. It's broken down under Ichimoku. We got growing momentum. We got a red trend filter. Everything's pointing downward on this thing. So what? We use Fibonacci extensions now from the absolute high to project price target. right? And a price target on this one is down here at about $6. So this is a nice short. Nation Star Mortgage Holding. There's a target. There is the stop. There's the entry. It's about 2 or 3 to 1, isn't it? That's not too bad. That's a nice trade. Very highly probable, good profit margin on that one. So we like NSM. So we got NSM, we got BCOR, we got a long on IPHI. Let's go look at one more. Let's look for one more long. That'd be a nice balance, wouldn't it? A couple longs, couple shorts, kind of straddle it. Let me scan down into the bullish territory on my scan here. So HK, let's see if HK, what is this? That sounds familiar. Halcyon. We're going to get to options because these ones that I looked at, I'm going to go look for option contracts on them. And yeah, I do like in the money. I only trade in the money high delta options. So Halcyon Resources. I mean, you saw the downtrend, right? Unbelievable downtrend. This thing is currently trading at 678, and it came down from, you know, the heavens, over 350 bucks. This thing came down from $450. Are you kidding me? So the next, what we're looking for is, boy, would this break out of the channel and start a correction to that massive downtrend? If it did, boy, the profit potential is big. Look how you got to mess with the scale on here to even be able to see current price action, right? If this thing were to break out, and there's some interesting things going on here, right? Look, it is trying, it's put in a high, higher low, high. It stayed, it did not put in a new low. If this were to break, right, look at the volume on this one too. You know, Friday's volume, 3.3 million. If this were to break, it's above the 200 SMA and closed above it. That's really good. Couple bars. If it were to break here, this could be a good retracement starting, right? And this is the kind of thing that could double or triple, right? Probably not going back to 450 anytime soon, but from 6, could it go up to, you know, one of these previous resistance areas, you know, up here? You know, even if it only went to this last high here, if it were to stall at 11 bucks, you know, from 740 to 1125, that's nearly doubled. That's a really good trade, and that actually could actually happen. So there's a nice watch list. That's a watch list. We want to see this new high be put in here. So we're not going to take a trade until it actually does it, because it may continue in this sideways channel for months. We want to catch it when it breaks and it's actually going to run. So there's a nice potential long. Okay, so we got 2 shorts, 2 longs. That's not bad. Let's look at one more long here. Well, that's pretty good. I can see it right now. There's 3, 4, 5 starting. There's wave 3 up to the high. So wave 4 went a little low, but it stayed above the 76.4 line, which would disqualify it. So that's an okay 4. Let's see now what the target is for wave 5. And again, I don't use any one indicator or any one thing to decide that a trade is good. I like to stack evidence and increase the probability of the trade. So first thing, we got a great wave count, 3, 4, 5. Prices above the Ichimoku cloud. So wave count, Ichimoku cloud, it's above the 200 SMA. It's got positive momentum down here, right? Those things start to add up to go, this is a pretty highly probable trade. Then we go, what's the stop? Stop's down here under this low. Entry is here. And the target is up here. This is like, you know, 3 or 4 to 1 reward to risk ratio. That's really nice. That's a really nice setup on CPE. So we started looking for short trade. We found 2 of them, but we ended up finding some good long trades too, and that's okay. I use wave 2 to anchor the Fibonacci, Alan. Wave 3, wave 2, rather than wave 1. If you look here, I anchored it. Here's 1, 2. That's where I anchored it. 3 is the end of 3 is up here. The end of 2 is down here. Okay. So we got some great trades. Let's look at this one as an example. CPE. Let's talk about an option, and I'll just do one to tell you, kind of how I approach this. Yeah, occasionally, if I can't understand what the trend is, TJ was asking about multiple time frames. If I can't determine the trend, I'll go look at the next higher. So on a daily chart, if I can't figure it out, I'll go look at the weekly. Or if I'm trading like a 60-minute chart, I'll go look at the daily. But on this one, it's super clear. I don't need to look at another time frame. This one is super clear. So CPE. So here's my criteria. These trades that I'm in, I showed you the trades on my website that I'm trading, right? The details on these trades, 2007. If you were to study this, you would see that we are in these trades an average of 4 to 6 weeks. That's the average hold time for my trades on the daily charts. So when I go pick an option contract, I go, okay, for my 4 to 6 weeks is my average hold time. That's, let's call it 2 months. Let's call it 60 days would be the trading period, the hold period outside of it. So 60 days. I want to have an option contract that's at least 90 days out. I don't want to be holding the contract in that last 30 days when you start getting theta decay, price decay, right? Because my whole strategy with the option is I want to buy an option contract. I want to have the stock go the right way. I want the premium of the option contract to go as much as possible with it. Then I want to sell it for as much profit as possible. And I don't want the price decaying based on time. So I want to choose a contract that has enough time left on it so I'm out of the trade before price decay starts. Hope that makes sense. And so I look here at CPE, and the January contract has 69 days left, so that's too soon, so I'm out in April. And I'm totally willing to pay more for a contract that has enough time. So if this trend rolls, I can stay with it and not be forced out because my contract is expiring. I do not want it to expire. I'm not going to hold it to expiration. I'm not going to exercise it. I'm going to buy it low and sell it high, right? So we are long on CPE. And then after I look at the time, then the next thing I want to look at is how deep. I want to go deep in the money with a really high delta. That's my objective. And again, the reason why would I go deep in the money with a high delta? I want to increase in price as much as possible. I want this underlying chart to go up to 17 bucks, right? Ish. I want to see a $6 or $7 increase. And so the higher the delta, the more the value of the contract, the more the premium is going to increase, right? So I'm willing to pay more because, this one's going to be 420 bucks for a delta of 88. Well, you can go buy one for 35 bucks. And people go, Dean, why don't you go buy the cheaper one? You can buy a whole bunch of them. Yeah, but it's got a delta of 17. That means if the price changes, goes up 10 bucks, this is going to increase 170, right? This one is going to increase, if it goes up 10 bucks, $880, right? I want the one that's going to increase. And I'm using the same risk strategy. I'm going to spend 2% of my account on premium. So if I got a $100,000 account, I'm going to go spend $2,000. Doesn't really matter if I spend $2,000 to buy 50 contracts that are cheap or 2 contracts at a higher price, because ultimately what I want is that $2,000 to double or triple in the life of the trade. That's what I want. So I'm going to buy, I like this $8 strike. $8 strike call. Now, the open interest on this contract is only 2 at this moment, but overall there's a vibrant market, so I think it's no problem in terms of liquidity in this market for CPE. So April expiration, $8 strike call would be how I'd trade CPE. Don't do spreads. Gemini, I do not do spreads. The reason is These are directional trades with, kind of a fixed time frame, and the highest profit, lowest risk is just going long the calls on the up trade, going long the puts on the down trade, right? The spread's got a fixed reward, a fixed profit, the credit you receive up front, and it has some exposure on the downside. Now, I know you got both sides of it, right? You can get assigned and, all these machinations, right? And you got a fixed amount, a limited amount of reward. Why not go for a huge reward potential on a directional trade? Spreads have their place on a directional trade. If you run an option scanner, like, TradeStation's got one, other things, if you go run a scanner and you go, I believe that CPE is going to go up 15% in 90 days, what contract shall I buy? These scanners will always tell you, go long the calls every time. 4 to 6 weeks is the average hold time on these trades. So that's how I approach the option. How much do I expect the open interest of 2 to change within 60 days when you want to get out? When I evaluate open interest on the overall market, I've never had trouble getting out of I've never had a liquidity problem where I cannot get out of a contract when I want to get out. And by the way, if you did run into a liquidity problem and say you were holding that contract and price was up here at the target at 17 bucks and you want to get out and you can't find enough liquidity for the contract, what's your option? Exercise it and sell the shares. So you're not trapped. There's no downside to that. And you can exercise and sell in the same transaction, and you have to put the cash up. Hey, so let me take some of your symbols. This is the portion of the presentation where I would be happy to analyze any that you're interested in. Yes, TJ, totally would work on weekly options. Well, so you would have to change your time frame for the chart analysis, right? For me, every option play starts with an underlying chart analysis. And so for weekly options, right, you got to have time for your trade to play out. So if I was trading weekly options, I'd probably be on a 10-minute chart. I'd have to find the trade set up on the chart. GM, somebody would like to look at General Motors. They're coming in fast and furious here, and this is Anthony. So GM, here's the impulsive move, and it looks like it's starting to correct. GM was not doing very well until late this year, and then it took off. It's had a bit of a correction. Is that a wave forward? That would be the interesting question here. And this whole thing is actually wave 3. That's not enough for 4. It's not even close. So we expect it actually to retrace down here, probably find support at the 200. So it's actually a short trade right now, but not a great one, right? It's got its first low, lower high. I would look for a new low before trying to short it, but I don't think that's the best shorting candidate out there. Daniel, MYM. I love it when I see new symbols. Never heard of MYM that I know of. And apparently it's not, I'm not finding data on that one. SQ, T branch. Is that square? Yeah, look at this. So what a beautiful trend. One of the few IPOs that's done reasonably well. This was too late for me. So as I mentioned, I'm trading Elliott Wave. I'm trying to catch a new impulsive move, a correction, or the next move. So for me, I do not chase trends. I hate to chase trends, right? When's it going to end? I don't know. And since I can't have an edge, right, a probability about when it's going to end, I don't want to touch it. That doesn't, it could double from here. I don't know. And since I don't know, I'm not going to trade it. I do not trade. I do not jump in late into trends. So this one, it's beautiful, man. If you'd asked me back here, as it put in a new high, I would have been all kinds of excited about it at 16, and we would still be in it. But it's too late to go long and too early to go short. PSTG for David. Pure Storage, okay. This looks like Is this a IPO as well? There's no more data on it. So it looks like it started back here in late 15. So there's the move down, there's the correction. The next move is probably down. Let's see how big that is. So that, okay, good. I'm glad I measured it, because here's the impulsive move. This is bigger, right? You can see this is bigger. Here's a correction. It is getting very close to going above the 76.4. If it does that, this could be a new trend. This could be a whole new trend. So that would be interesting to watch, but there's no trade there now for me. Oracle for Felicia. Oh, Felicia wants GBHL. I'm never going to get through all the symbols. I'm sorry. Wow, what happened to this thing? See these little dots? These tell us that there was this is a very thinly traded thing, these little dots. So you want to be very careful about that. Recently 300K, but this is a little too erratic, and I don't like that. So I would just pass on that completely. Oracle will trade with some volume, won't it? Get some more data. Well, it's just in an uptrend. It's just up and up and up. Still going. Bit of a sloppy, meandering uptrend. Could it be getting ready to reverse? Maybe, but you got the 200 under it, so there's really no good trade there on Oracle for me. Frank, do I buy leap options? No. No, I buy them about, like on that trade, CPE, we were looking at the April. So leap are usually a year or more. So I just want to be more than 90 days out from my expected trade lifetime. Disney for Larry. So Disney had this big run up, tried to correct, tried to get going. It's in a big sloppy swinging mode right now, not really any kind of trend or anything that we would be interested in trading, so don't really like it. In terms of a long right now, it is pushing right up against, it's gapped up last couple days. It's right up against the 200 SMA, which can be significant resistance to get through. If it were to get through it, there may be a long trade there. It doesn't meet my criteria, but the probability right now is that it would reverse off of that and continue down, but there's not a great long short trade either. So yeah, I am never going to catch up. CMG, I guess Chipotle, isn't it? You know, we have been studying this. There's the impulsive move down. There's the correction. Here is the continuation, which is becoming close to being the next impulsive move. It hit this target zone that we had defined, and it's a little too late to short it right now. It's a little too late to short it, and I certainly wouldn't be going long. So no trade on CMG. It was interesting though that it played out. Gary, DLPH. I'll take one more after that, and then we got to start talking about wrapping up here. Delphi. Hey, I'm glad we looked. I'm glad we looked. This is awesome, Gary. Gary has been through the Master Trader course, so no surprise that he is able to find a great trade setup. So here's 1, 2, 3. And we're looking for a target down into here, and it just broke the Ichimoku cloud. Now we got to worry about the 200, but there may be enough profit even if it were to find support there. So that's not too bad. Let's write that one down. Nice short trade candidate, DLPH. Thanks, Gary. Okay, get to the bottom. Yeah, you're welcome. What parameters do I use in the Ichimoku cloud? I think somebody else typed in, hey, mine don't look the same. Yeah, I have proprietary Ichimoku cloud settings. I got a nice, short, easy Ichimoku cloud course. You know, if I'm going to give you the whole method, if I'm going to give you my method for Ichimoku cloud, I want to give you the whole method so you understand the whole thing, not just the settings. So I've got an Ichimoku cloud course. It's on my website. You can check that out. That wasn't the objective today to talk about that. But if you really are interested, here's the homepage, products, Ichimoku Cloud course, and there it is. You can read the details about it there if you're interested. You're welcome. Is this webinar recorded? Yeah, as long as the technology works and it doesn't get corrupted, the recorder is playing, and we'll be rendering it and sending it out in an email in a couple hours, hopefully, if everything works right. Okay, technology is awesome. Well, let's recap. Let's go back to where we were here on the presentation. So we looked at some live charts, right? And again, I said, and I think this is, if you take nothing else away from this presentation, if you're going to be trading in the market, boy, make sure you have articulated, trade setups that have been proven to have an edge in the market, that have high probability outcomes, great reward to risk ratios. Make sure you have an approach to risk management that's legitimate, that keeps the losing trades, which are inevitable, at a pain-free level, and that you're able to manage the trades objectively once you get into them. You have black and white trade rules that you follow once you're in the trade, so that emotion doesn't drive bad decision-making, bad actions. So do you agree? Do you believe that having these three things would make you a profitable trader if you had great trade setups, risk management, trade management? Does that resonate with you? Is that yeah, people are saying, of course, heck yes, heck yes. It's obvious, right? So let me ask you a question, if I may. If I can just ask you a question. How many of you are excited about the trades we just looked at? So we've identified 6 great trade candidates. I'm going to be taking some or all of these in my own account. How many are excited about those? Or how many of you are a little bit unsure about how to act on them? What would you do from here, right? Do you feel like this dude, right? Wow, that was a lot of information. I'm intrigued. The trades look interesting. Dean sounds like he might know what he's doing, but wow, that was a little overwhelming. So how about if I spend a few minutes going over a special offer related to what we just talked about, a way I can help. You can continue on with these trades here. So the symbols are BCOR, NSM, DLPH, IPHI, HK, CPE. And a couple of those were conditional. They have to do a few things before we're going to take the trades. And there is a recording. You can go back and watch the charts and stuff. So yeah, a couple of people saying, yeah. So let me, if I can, just a few minutes here talking about how you can follow up on this, right? Again, these 3 things are essential: great trade setups, risk management, trade management. What would it be worth to get winning picks? Mine year-to-date average, out of a $100,000 account, they're averaging $1,900 return per month, right? That adds up pretty quick to a pretty good, healthy return. What does it take to go out and hire an expert for 4 hours of detailed trade consultation per month? On average, across the industry, that costs you about $1,200. One-on-one consultation with a professional trader, it's going to cost you $1,000, right? Ongoing education, follow through, answering questions. That's going to cost you $1,200. Total is about $5,300, right? I'm going to offer you all these things: great trade setups, great risk management, trade management, with consultation, training, support, right? And that's not going to cost you $5,300. In fact, you can do it for 30 days for $37. It's a trial to find out if it's a good fit for you. So I'm going to go ahead and post a link here in the chat area where you can try this you can join me for 30 days. Get my stock and option picks. So again, all my analysis starts on the underlying chart, on the stock chart, and I'll call out entry price, a stop price, a target price, and then levels to take profit at as the trade plays out. So you can trade that with the shares, absolutely. If that's your preference, you can buy the shares, you can short the shares, you can follow along for the life of the trade. I'll be calling off the signals for the whole trade. If you like options like me, I'm going to give the option contract that I'm trading with and the parameters to manage that, the risk management, the trade management. So both paths, stock and options. That's why I call it stock and option picks. You can get a huge discount. Try it for 30 days for $37. The list price on the website's $127 a month. You can get it, and a money back guarantee. In the first 30 days, if you check it out and you not my thing, it's not a good fit, that's no problem. No questions asked, no hard feelings. I'll give you a refund of your $37. I really want to give you an opportunity to try it, to see if it's a good fit, and most people continue after that. And after that, it's $97 a month, still a discount off the list price. It includes a free one-on-one consultation with me. So as soon as you sign up, you'll get a welcome email with a link. It'll give you my calendar. Here's the open dates, open times. Put an appointment on there. Let's get together and talk right away, get you off to a good start. There's a weekly update. I record a video, provide updates on the existing trades. I point out which ones still have new entries. By the way, if you join right now, you're going to see there are some trades I'll be updating later today that have entries you can get in right now, as well as the new ones that we just looked at. I'm going to isolate a couple of those and publish those. Wednesday nights, there's a live chat session. You can come tune in and check it out and ask any questions. We give an update on the trades. And email support, you can always email me. And so I just try to provide great service and complete support for everybody who's subscribed. And the folks who are subscribed are pretty happy. And I know several of them are on here watching. If you guys want to jump in with any comments, make sure you make it a public comment and offer your opinion. T, do we offer PayPal? On the form that we have up now that I sent that link to, there is no PayPal option. If you really want to do PayPal, I can help you out. Just send me a quick note, and I will send you a link. I have to go get it. I don't have it at my fingertips, T. So send me an email. I'll get you a link where you can pay with PayPal. Happy to do that. It's just not on that form. We're using some new technology, and PayPal didn't play nice with them. They've got their own thing going on. Hey, Larry. Hey, thanks for that comment. You know, if you make that comment to all attendees, everybody else can see it, and it's better. Oh, thanks. Yeah, people jumping in with some nice testimonial comments there. Thank you. Thank you very much. You guys are awesome. Okay, so I'm here to answer any questions that you have, you know, about the service, my approach, me, whatever. I'm here to help. I'll spend a few minutes taking questions, but you definitely want to, if you're interested, you're intrigued, give it a try. A very low risk, money back guarantee. Last thing I want is an unhappy customer. So if you come stick a toe in the water, give it a shot, and again, my method is working for a lot of people. You're seeing the good feedback I'm getting here, but it's not for everybody. People have different belief systems or different approach. I'll give you your money back. All you gotta do is send me an email. Say, hey, Dean, thanks for the time, but it's not a good fit. No hard feelings, no questions. Just, okay, here's your refund, man. Most people stay because they make money. Yeah, what's my analysis for the SPY, for the S&P 500? We looked at that early in the session, just as part of our environmental scan. We'll just look at the cash here, the S&P, rather than the ATF. It is still in an uptrend, and it has not showed any signs of changing. Still putting in higher highs, higher lows, higher highs, higher lows, higher highs. It's well above the Ichimoku cloud, well above the 200 SMA. It will correct someday. It has not shown evidence yet that it's correcting. So we got to trade that reality, and that reality is still going up. Hard to believe, but that is the reality. Yes, I do, Kevin. I do. You can sign up for a text service, and so you'll get a text alert when there's a new trade or when we make a change to an existing trade. We're in, on average, 8 to 10 positions at any given time, and we take 1 to 2 new trades per week and a couple updates during the week. So it's not terribly active, right? These are daily charts. If you're used to trading really, really active, intraday, it may look like paint drying, but we're grinding out profits consistently. So 1 to 2 new trades a week, couple updates per week. The amount of time you need to spend if you're just going to follow it is 1 to 2 hours a week, depending if you want to come to the chat session on Wednesday nights. William, if you have a $100,000 account, place a trade, spend 15K, what do you use for account size in the calculator? I still use 100K. So we size them based on the account size, not based on available capital, because at some point, you'd have $10,000 available and you'd be taking these little tiny trades. right? So I use the full account value for calculating the trade size. Different than some other folks. See, and I'm monitoring the questions over here. It is 9:15. We're going to give it 3 more minutes, and then I'll go ahead and wrap it up. And again, if you're thinking about this, you'll want to go ahead and jump on the offer, because once we leave, that's it. Victor, for the in the call options, what delta do I typically look for? I like it to be at least 80. I'll take it above, you know, in the mid 70s at a minimum. Stan, do I avoid earnings? Yeah, I avoid anything, any kind of known event that's going to cause disruption, right? So I won't take it right into earnings. I'm a week or 2 out. I'll take it and then maybe adjust the position, but I don't take it right into earnings or right into a big announcement, right? Because these big announcements, again, the market is a voting machine, and the reaction to the announcements can be emotional and it can be volatile, right? And that at that point, it's a 50-50 bet. It's a gamble. What's going to happen? I don't like to gamble. I like to have an edge, a probability in what we're doing here. I have not used Trade Navigator. I've explored it. It's interesting. I know it's got some really amazing back testing and, you know, programming capability. You can basically program things without being a programmer, which sounds really cool. But no, I haven't touched it myself. It sounds intriguing. I'm using TradeStation. I can code some very elementary indicators in it, and I like it. My other favorite platform is TOS. Like that a lot too. We did talk about the NASDAQ QQQ. We looked at the NASDAQ cash. Same thing as the S&P, heading up, unabated uptrend. It will correct someday. It's not giving evidence of that yet. We made it through an entire webinar without analyzing Apple. How about that? Nancy says she clicks on the link and it does not go anywhere. That is a serious bummer. I think it's working. Let me put that link that I'm posting into a browser. That's the link I'm giving you guys, and it is working. That's where it should go. If it's not going there for you, please send me an email and we will work with you. I'll even call you if we need to be. If you want to sign up, I want to help you. There you go. There's my email again. Just shoot me an email. Yeah, other folks saying, hey, it's working. It's working. Okay. Nancy, yeah, just send me an email if it still doesn't work, and we will make it work for you. We'll get you set up. All right. Well, that is a wrap. I'm going to go ahead and shut it down. Boy, I sure appreciate everybody showing up here on a Saturday, you know, giving your time. I hope you found it worthwhile. I hope you found good information. We talked about some great trades. It is recorded. I will send that out in a couple hours when we get all the technology to work. But hey, thank you very much again. Trade safe. You know, use risk control in your trading. You know, don't drain your account. Just because you're paranoid doesn't mean they're not out to get you or your money. They are. Right? It's a very competitive arena. So use risk control, keep your winners big, keep your losers small, and above all, have fun. Trading should be fun, not stressful. Thanks again. We'll catch you on the next one. Take care. Bye-bye.